Traders, what's going on? Jamie Setley here. It is September 19th, 2018, and this is the midweek strategy webinar with me, Jamie Setley. So, we've started here after I've got confirmation, as always, that I can, or that you guys can hear me and that you guys can see. Marco says yes. Pete says all good. Super. All right. So, first things first, it is nice to have Mike back, and he is hopefully with us without any more complications medically or anything like that. So he's back. He did his first webinar, since he came back this morning, and again, he will hopefully just be, business as usual. We're going to start. This is actually the NASDAQ. I want to start with this, just because I think it's super important. So we all know where the U.S. dollar is. It's chopping around, right? Not doing a whole lot here. So we're going to start with the NASDAQ. We usually start with that dollar chart, but we'll start here. This is the NASDAQ composite. So a lot of times, right, we'll look at the Qs, which is the ETF, which is this, or look at the CFD, which is the NAS 100, which would be like the more similar to the NASDAQ 100, which is the futures, right, on the NASDAQ 100 index. So they all show the important junctures we're at, but the composite, I think, really highlights just how important this is, and it's so clean, right? It's so clean from the standpoint of you don't have the overnight spikes on this chart, right? So you've got just the U.S. price action. So you're not going to have like as many looking false breaks type of things going on here. So that is always, to me, it's maybe a little cleaner at times, right? And you can see just how clean the channel from the February low is, right? February low, April low, right? Just use the high from back in March. You can see the center line, super clean. The 75 line, incredible resistance, right? Basically since June, in July, and again in August, very end of August. And we have come back to this median line, and we've been at it now since the 7th of this month. So, really just pressing into this area, and to add a little more importance to it, if you will, you've got the trend line that extends back to June, the June 28th low. So you're at just a huge level. 78.73 is this 9.7 low. To me, that is really the spot. Like, we stay above there, I'm constructive. We get below there, and I think next stop's probably the 25 line, because you're coming from the 75 line, even though that hadn't happened. When you dropped back from here, you probably want to add a parallel actually to this low as well, in case we were to drop, right? So if we do get below there, then you're looking at probably down towards a test of that August 15th low, which is going to be 7,600. Not that one, this one, which is 77.32, excuse me. Okay, that would be your first stop. So, it's just incredibly important that we pay attention to, I think, this composite, NASDAQ composite, the index here. Again, the other NASDAQ related instruments, right, the ones that we trade, of course, like the Qs, kind of similar in the sense that you're sitting on a support shelf. The breakage is not as clear to me as where that would occur, which is why I'm following the composite. right? Because if you break down this parallel here, you still got 180, which is the median line, which was support back on July 30th, okay? And then if we look at the CFD, I'd say this magenta line is probably the breakage point, which is essentially yesterday's low. By the way, this magenta line is not actually from this channel, although it's the same slope as it. It's actually, if you look at this, it's actually a parallel. Why is this so messed up looking? It's actually the parallel from, why is this so, sometimes these charts get a little haywire. It's pretty annoying. All right, so hold on. Sorry about that. All right, there we go. So this is the chart. This is the line that goes back to the tops back from, you know, throughout 2014 and everything, and 2015. So you do have a kind of a critical spot there. Marco says there's an on and off noise that you may make unconsciously to get to amplify the speakers. Seems like a, oh yeah, that is actually my mouse. Mike always tells me that my mouse is like really loud. I'm not sure. Maybe I just have really sensitive microphone or something. I don't know. So I'll try to be as quiet as I can, I guess, with my mouse. Maybe I'm just a loud mouse clicker or something. I'm not sure. I'm sorry about that. Anyway, the point of these charts, what I was just going through, is that really clicking mouse or no clicking mouse, is that we need to pay attention to 7870 in the NASDAQ composite, okay? And that's it. So there you go. As long as you're above there, upside resolution is favored, okay? You break below it, look lower till at least 7730-ish, and then see what happens from that point forward, okay? All right. So now we can resume our regular scheduled programming, FX-wise and all of that, and we're going to get into the dollar. All right. So here is our U.S. dollar chart. The U.S. DOLLAR, not DXY. And this chart you probably see in your dreams because we look at it every single Wednesday during the webinars for the most part. And we are coming into, or we have been coming into and trading around basically all week and kind of late last week into this center line, which is just the channel from the top, okay? You can see the bounce, 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 bounce. So this tells me a few things. It tells me that, one, there's something important going on right here, and that if it breaks, or when it breaks, I should say probably if, but I do think it will break. So when it breaks, we are likely to see a pretty strong acceleration to the downside, right? You just, think about it from any sort of support resistance methodology, right? Like when you test support multiple times and you break it, you tend to get a bigger move than if you just, go through it once, right? We've been testing this now since the 13th of September, which of course was last Thursday. All right. Came back, tested the trend line. Now we're here. So initially, I was thinking that the first support would probably be the long-term 25 line, right? Remember that back here. But it's so close now that, I'd still be aware of it, of course, but it's so close that when we do or break this median line again with the acceleration, I wouldn't necessarily, I guess, pay attention to this as much as I would have before. Okay. It's been super choppy, as we know in here, kind of difficult and annoying, frankly, given some of the things that have happened with the trading over the last couple of weeks, right? Like being long euro and then getting stopped out, like literally to the low tick, and then it rips higher. But that happens, unfortunately. It doesn't happen if you don't use stops, but then people that don't use stops usually, works for a while and then they end up going broke and not being in the trading game for very long, right? All it takes is one of those to go completely awry and you are out of the game. So that is something that you have to remind yourself when you are diligent about your risk management and taking stops and whatnot. Look, you live to fight another day. That's the most important thing. All right, so dollar, I'm looking for a break. That's simple, okay? If we do bounce at all, then I would expect resistance essentially at this high from yesterday, which would be your 25 line right here, okay? All right, well, let's go to the euro. So with euro, we've got, looking at Kiwi right before the webinar, interesting levels. I think you do have GDP coming up, right? What is this? Is that today? Yep. GDP Kiwi later tonight. All right. So, all right. So we've got. All right. So here's the euro chart. Choppy, choppy, choppy. Again, since about last Thursday, but there are clean levels. So this is the level that we thought, we'd see a test, and I thought it would be like a lot earlier than it was, like back here in August. But we did test it, and we have failed at it. So that's good from the standpoint of we know it's valid, right? We know it's a valid level, and frankly, if you trade up through this level, that's probably actually your best shot at an entry. I don't do this often, but this is a scenario where I would actually, really consider putting a buy stop in. In other words, to buy strength, right? You don't want to like put it too close because you'll get caught in a spike and then come right back down. But or it's one where you wait until you get maybe like a 4-hour close or something above it, or an hour close, if you want to be a little more risky. But this is a scenario in which I think is worth doing that, or consider doing that, right? Because look, the next level on the upside is probably not going to be until, if we just look at, well, look at this chart here because we'll have more stuff on it. But the next level probably is not going to be until at least 119. Okay, that's the center line from the old channel. So this is 117. Call it 117.40, right? Because 117.25 is the high. So 117.40 would be, I'd consider a decent break. Next stop wouldn't probably be until, again, at least 119. So worth considering that stop buy or buy stop option. But until that happens, really I'm just kind of an observer here. 2 levels to know for support. They're really the same levels that we've been talking about for the last couple of days, and that is, so you've got 1628, okay, and that's going to be your regular trend line off the low. So last night when I was writing the update, I mentioned that you have a shift fork working off the low right here, right? So when you're trying to identify slope, right? You're trying to identify the angle at which the market is trading, okay? The angle at which the market is trading. So before, right, when we have a regular trend line and you draw your regular channel, this is what you've got. Okay, so here is your channel. To me, the market is not trading on this, on this channel or on this angle, right? You did have a hit over here, but that was after it was drawn, so it doesn't really count. So what's happened is you go to the next best option, okay? And that's going to be the shift fork. In the shift fork, the origin of your pivot is moved halfway, okay, on this, or halfway, sorry, on the y-axis. So on the price axis. So you can see it was over here before, now it's moved up here, which is halfway between here and here. That's kind of those are your specifics on how that's drawn. Now, clearly, I would say that the angle that this is trading is probably more like the shift fork, right? You can see the resistance, especially yesterday. It was like spot on, right? So that gives us two levels to watch. The trend line level, which is 1630, and almost even better from a, I think from a kind of a tactical standpoint, would be actually if you got a move all the way down towards that 116. Several reasons for that. One, this line's fairly close to that, although at this point it would be over here. The market's doing a whole lot of nothing, so we're not really getting the levels hit that we'd like to see hit. But two, think about it. If you broke below this level, this line here, how many people would probably get super bearish and short on that, and it would basically set up for potential false break to the downside, right? In which case, you have even more fuel on the upside to go higher. So that's why I'm saying that, look, you could still get 116 out of this for an entry, right? So either 116, in my opinion, is the spot to buy it, or above, say 117.30, 117.35, right? So breakout option, buy dip option. Two ways to look at the current euro. All right. Cable is essentially trading oh, sorry, my sound was off for a second. Okay, so cable is trading in a very narrow band between these lines. It's not even a 25 and 75 line. It's trading between halfway between that point. You can see the resistance and mostly the support, and this has been going on basically since 9/11. I hate saying that, but since September 11th, which was last Tuesday. Okay, so my thought, I'm kind of thinking that like the better spot to look for a cable long is going to be down here. Right, about 30.57, and that's going to be really close actually to the weekly open is 30.72. Looking here on my other chart, so 30.56.72, 57.72. it's a good spot, I think, to look at. You know, if we get it. You are getting, you know, somewhat of a reversal today. Day's not over, but cable's actually up 7 pips on the day. But you know, this is a pretty strong move to the downside after taking out a big spot. You can look over here. You see that right here. So you took out, what is that? The July 25th high. You know, tough to be a buyer, I guess, right here after you take that out. Like to see maybe us hit a better, more well-defined spot. So, you know, 30.57 would be where a place I'd get interested in. And, you know, we'll see this when we look at some of the other cable crosses here in a little bit. But this is not, in my opinion, your best option for playing dollar weakness right now. Okay, at least not yet. Aussie looks better, even maybe even dollar yen on the downside, although that's just churning up here around our big spot, which is, or just below our big spot, right? 1244.63. We hit 112.45 last night. So, you know, not totally enamored just yet with that one, but we'll get there. So cable, wait and see approach. You know, also at the same time, I'm not all that keen on taking a short here, given that I think the, you know, broader dollar move is down, and you get kind of trapped into these trying to be cute. Like, I'm going to take a short, you know, I'm going to catch 100 pips on the downside for the pullback, and then buy the pullback, whatever. Well, the problem with that is a lot of times, I've done it a couple times, right? I do it. Not immune to making mistakes, but the problem with that, of course, you're fading the trend at this point. Okay. And you've got it in your mind that you're going to be buying dips. You want to be on the long side, the short side of the dollar, long side of cable. You end up going against the grain, going against your own kind of analysis. And then, you know, the loss kind of makes it doubly worse, right? Because it's psychological as well. And you just kind of want to stay away from that type of activity. At least I do. So, anywho, 130.57.72 is the area that I would be paying very close attention to over the next couple of days in the British pound. Okay. All right, let's go to Aussie. So Aussie wrote last night, right, that I think this is probably the best place to be, the current juncture, right, when it comes to trading the dollar. So you do have a head and shoulders bottom here. Target for that is up near 73.80. We'd be looking at 73.70 as initial resistance. That's where the trend line from February sits at this current juncture, at this current point. We've gotten up into some resistance. This has been, again, it's been a bit tricky. Sometimes, you know, you're just in a rhythm with markets. Like, you know, July, I was certainly in a rhythm. Most of August, I was in a rhythm. September, not so much rhythm. Not for me, at least, right? So part of that is probably just the extremely slow developing nature of what's going on right now in FX. Like, we were looking to buy 71.50, and we pull back to 71, you know, 42 would have been perfect. But at the same time, at that point, I was saying, we're going to wait until down here, right? You have a better entry down here. It never happened. And, you know, had one or 2 nights ago, and it missed by, you know, about five pips, and then we turn higher. So, you know, just not sometimes in the groove. That's okay. So at this point, you are testing the 200 average in the 4-hour chart. Probably don't want to be a buyer right into this. Not to mention that, but you've also got 72.90, which is going to be a level to pay attention to, 30 pips higher. So the spot I would look at, there's really 2 of them at this point. I mentioned on Twitter talking about the 72 handle, right? 72 is going to be the median line. We can bring in a different chart here to show that, just to show kind of like how clean that level is. Let's see here. So scroll back. Okay. So something like this would be ideal, right? You come down into it, you test it, you rocket off it right away. Those are the best trades, right? The ones that go in your direction immediately, right off the bat. You've seen good resistance there as well, you know, some support going through it, right? Some strong action here. And most recently, which is what you really want to see, it was resistance. So you want to see that, you know, kind of playing, you know, or in play, I should say, you know, real recent, and that has certainly been the case. Okay, so there's two levels to buy, in my opinion, and that is roughly, go down to a 60-minute chart. That is roughly 72.30, which is going to be right here. Okay, that is the high as well from the 13th. Okay, which was, again, that was last, what was that? Last Thursday, and then the median line, which is down here. And that's going to be closer to 72, call it 72.05. Okay, so might be worth staggering orders for Thursday trade and maybe Friday trade at these two spots, right? If we do get into Friday and we haven't been triggered, then you're talking about potentially getting 72 again, but it would be over here. So really what you want to do is you want to just follow, in my opinion, follow these slope lines within this very short-term channel. The best trades, of course, are the ones that line up, you know, with a confluence, right? I say that a lot, the confluence thing, but that's when you line up, when you have a intersection of a bullish and bearish slope, okay? So that's what we'll be looking for. I do love the Aussie on the long side. Generally, I will play it through Aussie dollar, as I do tend to play the dollar crosses, as you know. Just for whatever reason, it works out a lot better for me. I don't know. Non-dollar crosses, I seem to get a little questioning myself sometimes. But, you know, looking at the other crosses is instructive in the sense that, you know, the pound Aussie chart from last night, right? Big reversal there, big, you know, daily J spike from a huge level. It just kind of increases the confidence that I'm seeing the right thing, right? Is that what I'm seeing tends to make sense. Okay. All right. Let's go to Kiwi. I like Kiwi on the upside as well. Like Aussie a little better. Again, part of that is the Aussie Kiwi chart, which has dropped into and held very important support. That does not mean that support can't or won't break, but it does mean, you know, it means what I said, that you've held support. So you might as well, you know, play the stronger over the weaker. And at this point, I do think that is Aussie, and we are seeing that borne out a little bit today. However, as it comes to the New Zealand dollar, we've got really good levels to look at as well. Like Aussie, we are testing that 200 average on the 4-hour, right? It's a beauty. You can see it right here. Like Aussie, the median line of the channel, it goes back to February, right? February high, March high, right? Outlier over here. That is the level at which I do think you probably want to see hold, okay? And that's really quite close to current market action. So it's 65.80 roughly. And you'll notice that I've got something drawn here that you might kind of question, right? You say, like, Jamie, how do you have this fork drawn when we obviously haven't touched the median line, right, at all? So you can't possibly verify this. Well, here's the thing. So this line, this is the 25 line from that fork. I would say that this is a pretty good representation of the angle that the market is trading at, right? So that's good to know. Ways to approach this. One, you drop, and again, we have the GDP tonight in New Zealand, so, you know, this is appropriate for later today. You're going to want to keep, you know, this chart kind of, you know, front and center for later today. But if you pull back, you know exactly where you're looking for support, okay? 65.80 or so. If you do not pull back and instead you move higher, at some point in the future, this line, which was former resistance, and I think it, safe to say that it was extremely precise, right? At some point, this should be support, right? You want to see former resistance provide support. So, that's something that we can envision happening. Again, the great thing about this type of analysis is that you're not predicting, okay? Instead, you're kind of trying to get into the rhythm with the market, right? You're trying to get in tune with the market, okay? Whatever market it is you're trading, excuse me. And that could really be anything, right? You're just analyzing price, you're analyzing angles. So you've got levels at which you want to trade. You're trying to identify support resistance and trade around those support resistance levels. So yes, I like buying the New Zealand dollar. First level to look at, again, is going to be about 65.80. But if we do break higher, at some point in the future, we're going to be buying on this line, which has been resistance, okay? And the focus for the upside here is going to be this February-March trend line. And at some point, if you get above that, now, we're getting a little too far ahead of ourselves at this point, but at some point you get above that, then things get really bullish for the New Zealand dollar. And who knows, this could be a fork or, a slope structure that we are involved with for some time. Remember, something very similar happened back with this was the dollar yen, right? This is back in February and then back in April, and we identified this pretty early on, okay? And you can see now just what's happened with all the trading within this fork, okay? So that brings us back to dollar yen. Good segue. So dollar yen, we're there, folks, for the most part. I mean, this is the trend line back to the 2015 high. Okay, this red line. Question being here, what are we going to blast through this thing to the top side and go nuts, or is dollar yen going to fail up here? I don't have the answer to that question. So far, this is probably not really the action I'd be looking for a for a short position at this point. You'd rather see something a little more spiky, right? Kind of take out a level and reverse off of it, right? Get a high volume level, get something. We haven't seen that happen yet, so I'm not short yet. I'm not anything. I mean, it's okay. You can be flat. We are sitting just churning right around this level. So the level that the bottom of the zone actually we're looking for, which is daily reversal resistance, I guess has been more or less hit, right? It's missed by a pip, but you get the idea. We're in the general area. We're in the vicinity. And 112.62 is your yearly opening price, okay? So, that's a level at which, we want to see something happen, okay? We want to see a reaction. We want to see a pullback from this area. At the same time, as mentioned, 111.57 or so is probably the area at which I would expect to see some support. There's a lot of things that can happen from here. I'm just giving the levels at this point, right? But, presumably you want to trade with these levels, but, you can envision if you pull back and kind of make a topping pattern from here, I would take it much more seriously than if it was at a random spot, right? Because you are in a big, big area, okay? All right, let's go to dollar CAD, and then we will take a look at some non-dollar crosses, and we can move into gold as well, which is maybe, possibly trying to make a move, finally, potentially. Okay, dollar CAD. Reacting right off of the 2012 trend line. You've got a pretty good slope here as well, right? So we've kind of changed from following the old one, which was here, to following a new one, which to me has enough touches on it to be important. So again, sticking with kind of a dollar bearish theme, I do think that resistance, so you can see this is the 25 line, which was resistance, or sorry, support, and then resistance. That was just yesterday. Was it? No, it was 2 days ago on the 17th, right at the end of the day, actually. And that's essentially where I'd be looking at resistance again, folks. All right, so, call it 130.40. Just like New Zealand dollar, we can look at other scenarios. So kind of if then statement. So if we don't get up here, instead if you do break down below this level, then you'd kind of be looking for resistance back at the median line, right? That's the zoom and retest setup that we are so fond of. Yeah, Ty. Ty brings up a great point. So Ty says, if you look at the ATR monthlies, many of these pairs were unbelievable long-term lows that precede move. Absolutely, that's a great point. And this volatility low can certainly last for quite a while, but it's already been it's been underway for quite a while, right? We've already been quiet for so long. So that's a great point. Not only does it precede more volatile, bigger moves, as you say, but yeah, big trending moves, right? Which is what you were saying. I get it. It's what you were getting at. But that is a great point. So thank you, Ty, for bringing that up. Maybe I can put together something on that for us over the next, maybe over the next, maybe next week. I'm actually going to be out of town, so I will not be on the desk tomorrow. Or Friday, unfortunately. Maybe very early tomorrow I will be for a little bit, but I will be out of town on the road Thursday and Friday. So you're just going to have Mike, I think, probably for the most part. I might be able to get something out very short on Thursday, but frankly, I doubt it, given that I'm not going to be in a place with, I don't even know if I'll have internet. So kind of be in the woods. In any case, great level to follow here, great slope, I should say, to follow here for dollar CAD, okay? And if you were to break down 2016-17 line, it's probably going to be, some support around 28.30. And then at that point, you'd probably be looking at 29.30 for resistance and a short, right? But as it stands now, as long as you hold this, it is to me still difficult you don't want to sell into this right now, okay? You're at the level as I'm speaking. All right. Okay, let's actually go. I did forget to look at the Nikkei. Look at these. Look at the bounces off these levels. I mean, this is crazy. I mean, it's just nuts how precise that can be. All right, Nikkei. Giant breakout. Yesterday's move was insane. Nikkei was up over 600 points yesterday. Dollar yen is firm, but let's be honest. 600 points in the Nikkei in the old days, dollar yen's up 200 pips, right? So that's just not the dynamic we're in right now, to state the obvious. But levels to look at here, I do think that 24,015 is really a spot that, you could see a pretty decent pullback from. That is daily reversal resistance. Again, that's the January 23rd closing high, right? Not the high close, right? But the closing high. So the closing high for the whole move is actually up here, and that's 24,073, and that was actually on the 17th of January. But the high day, right, the close of that is 24,015. That's what daily reversal resistance is. Okay, so that's what we're looking for in terms of a pullback. Obviously, you like that it lines up with the 75 line on this channel. And any pullback, you have to look for support at the median line. maybe a little bit below because the parallel off of this high would be just below that, but that gives you a very clear range to look at for support, whether it's over the coming days or even longer. Obviously, it's a huge move, so you might need to digest a little bit and go into some sort of a, a sideways pattern. And if we do, you know where to look. Okay, so this, of course, will be of interest as it pertains to kind of the developed markets generally. Sometimes you get a really clear pattern or clear chart, and that's the one that you want to follow, until other things clear up. All right, let's look at some non-dollar crosses now. Okay. So you can start with Euro Yen. Certainly bullish Euro Yen, okay? No reason to be bearish here. I guess you do have, you're trading right at the 200-day average, but I don't, you've broken through a big level. I mean, this is the trend line, the blue trend line. Let me move this to here. Okay, there we go. The blue trend line is back to the February high. Validated when you failed at it, failed near at least in August. Okay, pulled back and we broke through it. You can this is very similar to euro dollar in the sense that, look, it's possible that you still, get a drop back to 130, 130-ish, just like it's possible that you still get a pullback in euro dollar to what would we say, 116. So still very much up in the air here. You take out the high from today, from this morning, you're probably off to the races. Okay, so Euro Yen looks good on the upside. Again, nothing pressing here for me to trade. I'd rather trade Euro Dollar and Dollar Yen separately at this point. The only time at which I would go straight up and just trade this is if you just got the perfect setup, the pullback right back to the top side of the former trend line, which at this point is going to be a little bit below 130. It's like 129.90, but you know what to look for. That's all we can ask, right? All right, Aussie Yen, love this chart. Like this better, of course, than Euro Yen because, well, I like Aussie a little bit better than Euro here. Again, if you did get a pullback, the level to look at, as we said last night, is going to be in that 80-70s. That's the 4-hour 200 average. And this is actually a fork that I did not have in last night's update. And you can see just how clean that one is, right? Oops, just how clean that one is. So you trade up into the median line, you pull back into the 25 line, you trade back up into the 75 line. If you can get a pullback and get back to that center line, which would also be this shorter term fork, also be the top side of this trend line, also be the 4-hour average on this, or 200 on the 4-hour average, 200 average on the 4-hour chart, I can't speak, then you would have, 4 things there for massive support, and I think you'd probably be up to the 82-70s in short order. So, this is where I want to trade, and this is where I'd want to take profit. Okay. Longer term, as mentioned yesterday, certainly could get back up into the 84.50s. You got a 1, 2, 3, 4, 5. Okay. Former fourth wave of 1 less degree. Typically where you go is kind of a magnet, right? So Aussie Yen bullish on dips. Pound Yen actually a little bit different, as one would expect. Pound Yen's testing massive resistance. Look at that. It's the trend line back to the, is it January high or February high? It is February, first day of February. Okay, so the February, April highs, Pound yen spiked through it this morning. We've come back below it, currently more or less unchanged, down 5 pips on the day. So you are testing a significant level in pound yen, and would therefore be wary of us coming off a little bit more here in pound yen, right? Now, we can see that. So you look at Aussie yen, looks bullish. Pound yen, I wouldn't say pound yen looks bearish, but it looks like, you know, it's at resistance, and I wouldn't want to be getting bullish here. So put those together and you get pound Aussie, which, as we said yesterday, right? This is the 4-hour chart. The daily chart was shown yesterday, and that, you know, showed the failure here at that beautiful line, okay, beautiful upper parallel. Well, if we go to an hourly chart now, guess what? You can draw yourself a nice little bearish fork to work with in British pound Aussie dollar, okay? Double top here formed. Target on that double top conservatively is going to be 178.50. I do think that you get down to this area, which would be, again, that's about 178.50, but you know, that's the blue trend line here. So, you know, I'd watch this. It's a lot like Aussie, not surprising, right? You've got resistance, probably 81.50s, and then it could be up as high as near the 75 line at 82.30, okay? And that, my friends, is everything I've got in the world of FX. So, what about gold? Gold's trying, as they say. It's trying. The big thing, of course, as we know, this is the CFD. So prices are probably a little, let's see, where are we on gold futures? We're at 1208. So 1208 on the futures and 1203 on the CFD. So you do want to be aware of the fact that you're looking at the CFD and not the futures, right? Because the levels are different. But I've just got it charted for the CFDs. I think a lot of you trade that anyway. But you do have a great bullish fork working here right now, right? Traded up to the median line, so we confirmed it right away. Down to the lower parallel. And since then, guess what? We're trading on the 25 line. Boom, 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 boom. You get back above here, and gold would be in a very bullish spot, in my opinion, okay? So get above this 25 line, which is 1207. It's in $4, and I do think gold's in quite the spot. You get above 1221.50, we'll say, to be conservative, which is the trend line from back in April, right? April and June highs. You get above that, which would also be the median line, then you're in really bullish territory, okay? So I'm constructive gold. You know, needs to hold essentially right here, which is 1195. But as long as you're above that spot, and that's going to be 1200 by the way on the futures. As long as you're above that spot, gold is in a very bullish position, and you know, upside first test is going to be this 1220 spot. Okay. This also gets me thinking, I guess, a little bit about Japanese yen, right? So the fact that the yen is, or dollar yen is up at this resistance area that we've been kind of waiting for a while, kind of has me thinking that, I don't know, I'd respect the potential for dollar yen to turn over. Okay. I know it is a breakout. I can't argue with that. You've broken out of a big spot in dollar yen. Okay. And yes, the 1157 area right here is going to be an important level to watch for a retest. However, I guess I'm saying that I'm just open. I'm very, very much open to this whole thing here, breaking through this neckline. I'm very open to it being a false break. It's tough to jive like a really strong dollar yen with a generally weak dollar and strong gold. That's all I'm getting at. Okay. I'm not saying it can't happen. Crazy things can happen. Correlations break down. But, just kind of want to know, or want you to know where my head's at on this. Okie dokie. So that's all I've got for today. Are there questions? Any questions for today? I am going to be out tomorrow and Friday. Okay. I will put that in the update tonight just so as a reminder, but I will not be around for the next 2 days. I will have an update tonight, of course, but there will be no Thursday swing update, more than likely from me. Okay. Mike is back, so he will be writing an update, but I have something that I have to attend to. So I'll only be missing the Thursday update and it won't be around Friday, but making you aware. Okay, questions, going once, going twice, and sold. Okay, all right, so I'm gonna archive this and have it up for you ASAP as always. Thank you for your time as always. And a lot of interesting junctures out there. It seems like a waiting game right now, right? I mean, kind of waiting on the dollar to break down or, bounce more, right? Either way, it's a sell. Okay. NASDAQ, what are we going to do? Are we going to hold that level or are we going to break below it, right? What happens with the dollar, it might have to, might influence what happens there. I mean, lower dollar tends to be a little more on the bullish side, at least, the dynamic that's played out recently, but we shall see, right? Gold, are we going to make good on this kind of behavior change? So a lot of questions to be answered, which makes for a very interesting time, lots of opportunities. Okay, again, thank you all very much. Marco saying, as for the noise, I don't think it's the mouse. I can hear it and it's okay. It sounds like your chair, or maybe it's a problem with my speaker. I don't know. Marco, we'll do some testing, and I appreciate the information. So thank you, sir, for that. And we'll see what we can do. Okay, all right, everyone. Thank you very much. I will talk to you guys later. All right, bye.